Good morning or afternoon or evening, depending on when you're watching this. This is Tom Alexander. This is the stock market update, the U.S. stock market update for the week beginning November 10th. It happens to be Saturday, November 8th, as I'm recording this. And we had quite a week, ending in quite a day. Friday was a wide range day to the upside, closed almost exactly top tick in all four of the primary U.S. indices, the SPX, the NDX, the Russell, and the Dow. Now, the other indices, the RSP, uh, New York Composite, NASDAQ Composite, all of those closed to the upside. So this is important because what that shows is institutional conviction to the upside, at least as of the close on Friday. Now, the catalyst for all this, the exogenous trigger, I think, happens to be the current government shutdown and all that. So, we'll see. I'm a price action trader, but price responds to stuff like that. So it's helpful to be paying attention to at least what the news is. Uh, what the news is not important. What the reaction to the news is important. So the reaction on as of Friday's close is very positive. Now, that said, I don't know what they're so happy about yet, but whatever it is, if that gets reversed over the weekend, that's the fly in the ointment of the immediate bullish case. Now, otherwise, this reversal on Friday was extremely significant for a number of reasons. Okay, let's get into the charts and we'll talk about that. Okay, this is the SPX, and we've declined from top tick to bottom tick 4%, a little more than 4%, which is a big nothing burger, really. But in this market, it's a lot. And it feels like a lot because the retracements since the April low have been so shallow and short-lived. So is this another important low? It really, really could be, believe it or not, another important low. Now we're going to go ripping higher immediately to new all-time highs. That would not be typical market structure. It should be, of course, I say it should be, but this has not been a typical market. I mean, look over here. We had this move here. Let me just do this. We had a low form here and virtually straight up. I mean, you had 1 or 2 day or a few hour declines, and we were up 5%. Well, that was nothing more than a few hour decline interspersed in there. So could we go straight back up from here? Yeah, we could, but that's not the typical path. We'll see. That's neither here nor there. What is important now is this low. The Friday lows and all the indices now are the line in the sand for the immediate bullish case. Hard stop. Now, secondarily, because there's so much conviction, and I'm using that in an auction market sense, there's so much conviction to the upside. If this is as bullish as it appears to be, ideally, you're not going to see much more retracement than, say, 50% into this bar if it does retrace. Now, it may just go straight up from here, and then eventually it comes in, after a few days and maybe comes in here or something. But as we head into Monday, as we head into next week, the 50% retracement levels in all the indices are levels you want to keep an eye on. Now, if this is as bullish as it closed, we'll probably gap up on Monday. So we'll see. So this is the SPX. Now I'm going to show you this level. I'm an auction market trader, and I've been using market profile almost since it was initially posited by Stellmeyer. And it is grossly misapplied, misunderstood by 99% of the people that use it, and even 99% of the people that are out there that claim to be market profile experts, including some of the icons of that space. You don't want to be a market profile trader. You want to be an auction market trader. Okay. You want to be able to look at a market and see this market structure through the lens of how an auction market develops. Okay, enough of my rant. I want to show you, this is the profile view. Now, this is the September and October auction combined into one auction unit. And you can see we came right into this high volume node where the greatest amount of trade activity occurred during the September, October auction, and basically V bottomed out of it. That's important. And I can show you the same thing in the other indices. Let me go back to my cash charts here. Here we go. So here's the SPX. Let's look at the INDX. Now, the INDX came right to the upper cusp of this level, this high volume node, and bungee jumped back up. The INDX is down about 6%. Let's go to the Dow. Two-day, this was a 2-day low. Notice it in every instance, it's uncanny. You know, everybody wants that magic secret that tells them the exact spot the market's going to go through some arcane formula, and it doesn't work that way. What does work is, again, understanding and reading a chart through the lens of this auction market perspective. And the market tends to go where price has been. That It's that simple, and that's true in all time frames. Your targets are something that has previously happened between buyers and sellers. Keep that in mind. So here again, the Dow stopped at this 2-day low back here prior to this ramp higher, and it's only down 3%. All right, let's look at the Russell. Now, this was fascinating to me because and these are levels that I talk about every single day with my membership group, and we talk about it in the live room. So this is not hindsight stuff. This is stuff that we've been talking about and has been identified. As a matter of fact, you can go to the website, go to weekend updates, and you can look at, for free, you can look at previous weekend reports that have these levels on there. And you can go back years and look at that. That's alexandertrading.com, weekend updates. By the way, if you're finding value in this, please subscribe, please like, please hit the notification, please make comments. All of these things help with the algorithm of growing the channel. So thank you. Okay, so the Russell spiked through this ledge. I mean, the Russell was really on the verge of being in the abyss and rejected strongly. And again, note that all of the indices, regardless of the composition of that index, were up. That's important because we've had such a bifurcated market driven by 7, 8, 9, 10, 11, 12 stocks. Well, the entire universe exploded to the upside on Friday. That's potentially a message. All right, let's look at the NYA. It's here somewhere. Here we go. Same deal. It didn't quite come down into this area, but close enough. Now, another interesting thing about the New York Composite, it's in a balance area. Look at all the overlap of price in here. If it gets above 21.6, this is good. Let me just take this thing off. And so you can see the labels here. There we go. If it gets above this level, you're in an elevator shaft back to the upside. Now, am I suggesting that you'll go straight there? No, I'm not. I'm just saying there's nothing between here and here from an objective auction market perspective. Also note, I mentioned earlier about the 50% retracement level. You really shouldn't see that. Well, for two reasons in the New York Composite. First of all, that would be roughly the high volume node of this structure. So that's auction market trading 101. Your high volume node is a very important inflection point. Okay, let's see what else. Equal weight, it's in a balance area. And again, you came down to a ledge. Below this level, you're in the abyss. Here is your 50% level right here. That would be the midpoint that would be the high volume node of this structure. If you can visualize a market profile, that Gaussian shape of a market profile right here. Okay, let's take a look at a couple of other things here that I want to share with you. Internals. Okay, now this is NYSE data. I keep 10-day moving average of NYSE advancing issues. I keep a 5-period moving average of NYSE advancing issues. The red is the 10-day. The green is the 5-day. The histogram is breadth. Now, breadth, and I understand, and you should understand as well, breadth has not been particularly helpful. It's never particularly helpful in strong bull trends because it's much more helpful in identifying lows than it is highs. That's never been more clear than in this rally since the April low. You've had divergences for months between price and breadth, and that's one of the big reasons for that. But it's true in all markets over the 40 years I've been doing this work. This is much more helpful at identifying lows than it is high. So I'll say that up front. Now, it's not something you can rote trade. It's something you can help, that can provide context, can give you, information. So the information as of Friday, if you notice since the April low, every time we've come down into the area, that the NYSE 10-day moving average of advancing issues has contracted to the level that it hit Thursday, Friday. We've had a rally, a big rally, a rally to new all-time highs. So we'll see if it's different this time. But it's just another reason that low on Friday could be very significant. Actually, that low on Friday is significant. Now, whether it holds or not is a different story. But if it doesn't hold, it's significant. If it does hold, it's even more significant. The weight of the evidence right now has to go to the bullish case. So we'll see how that plays out next week. Let's take a real quick in closing. VIX. VIX is really interesting. It never got extreme. I don't think it ever closed above 20. It got right up to it, and then it declined on Friday, as you would expect, with this massive rally. But you can see it never got extreme. We in this decline of 3%, VIX spiked up to 25, which quite frankly is not all that extreme. And in this decline, which was greater by 25%, VIX didn't come close to getting as high as it got several days over here. Interesting, right? You guys enjoy the rest of your weekend. I will speak with you again very soon.